Okay, folks, we're going to get started in a few seconds here. So take your seats, get comfy for our weekly update. And welcome to Preparing for COVID-19 Recovery, Loan Options, and Forgiveness Strategies. It's August 10th, 2020. It's been 18 days since the last time we broadcast an update. I hope that you're doing well. It's a beautiful summer morning and it's Monday. Okay, welcome to Monday. What a way to start the week with this update. So as you know, and maybe this is your first time tuning in, these webinars are being powered by Sachs, sacsllp.com, Sachs Wealth Advisors, sacswell.com, and S2 Solutions, s2solutions.tech. Those are our companies, our partners that are producing these weekly updates on the SBA loans and recovery overall. This is our slide that we always like to show, that our firm is providing this information in for general guidance only. So please, it does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. The information provided herein should not be used as a substitute for consultation with professional tax, accounting, legal, or other competent advisors. So before making a decision or taking any action, you should consult a professional advisor who has been provided with all the facts relevant to your particular situation. And obviously, we are here to help. So please contact us. Meet our recovery task force. Yes, myself, Todd, my partner Josh, and Steve are bringing you this webinar today on the latest and the greatest of what's out there. So let's talk about today's agenda. Well, we're doing the introduction right now. We have some app updates from Capitol Hill, which Steve is going to present to us. New Jersey Small Business Lease Emergency Assistance Grant Program. And then we're going to talk about the PPP loan forgiveness. Josh is going to be sharing that topic with me, the new SBA FAQs and the FTE reduction exceptions, which, by the way, folks, we find that that's still an area where a lot of people are still confused what really constitutes an exception to those FTE reductions. So let's talk about CPE, since I know that some of you like to get CPE from these webinars. A few things. First, going to go over these again. If you look at the taskbar, to me, it's on my right-hand side, you'll see a participant evaluation sheet. You need to make out that evaluation sheet and send it to the appropriate person at the end of the webinar. You need to stay for the entire webinar, which if it's not 50 minutes or more, it doesn't count for CPE regardless, but you need to stay for the entire webinar. You need to also respond to our polling questions. There are 4 polling questions, and you need to respond to at least 75%, which, if I do the math right, that means 3 of the 4. And pretty much that's it. You need to do all those things, show up, stay, respond, send in the evaluation, and you will be golden. So let's start with the very first polling question, poll number 1. So, which of the 3 panelists of your recovery task force has been with Sachs for over 20 years? Is it Josh, Steve, or myself, Todd? So we'll open up the poll and we can take a look and see who is that. Who is it that you think has been with the firm for over 20 years? Is it Josh? Is it Steve? Or is it myself? So hopefully you are voting right now, and we'll keep it open for a little bit longer because it shouldn't be too difficult to guess this one. Okay, countdown 5, 4, 3, 2, 1. Okay, well, most people thought it was me, and that's correct. And Josh was second, and Steve was third. I think that is the order in which we actually have stayed with the firm. So I have been with the firm since the year 2000. So I guess I'm just a little bit over 20 years. I'm going to turn over the rest of this section, the update section, to my partner, Steve, who's going to tell us, Steve, what's going on? What can you update our audience with right now? Steve?
Thanks, Todd. I hope everyone is doing well out there. Welcome to our first August webinar. We haven't been with you in a while, so nice to reconnect. And we wanted to keep this webinar as up to date as possible. So you may have seen over the weekend, actually, President Trump issued 4 executive orders on Saturday, the 8th, in response to the fact that Congress couldn't reach a deadline on the coronavirus relief package, the next round of funding. There was a self-imposed deadline of Friday the 7th that has since passed. And as a result, we saw President Trump move into action on Saturday. And these 4 congressional actions are listed below. The first, it reinstates the extended unemployment benefit. The $600 a week benefit had expired on the 31st of July. President Trump has now issued an executive order instituting a $400 a week benefit through weeks of employment ending no later than December 27th of this year. So weeks of unemployment start with the beginning of the week, so that basically makes it last through the remainder of the calendar year. And 75% of this, or $300, is borne by the federal government, and 25%, or $100, will be borne by the states. And there may be some legal back and forth on this as to whether or not these states are able to be compelled to actually pay this, and also the states are saying, well, they've already spent their coronavirus funding and there is no additional funding coming our way, so some states may not even have the resources to pay for this. We saw a payroll tax deferral, and I want to be clear here, it is a deferral, not a cut, not an elimination. This defers payroll taxes, certain payroll taxes, between September 1st and the remainder of the year for people earning less than 100,000. The way the executive action reads, it is a deferral of the Social Security portion, the 6.2%, but we have seen some articles and some correspondence back and forth saying that may actually incorporate both the 6.2% Social Security and the 1.45% employee portion of the Medicare tax. So we'll see where that ends up. But President Trump has indicated that he is seeking a means to make this deferral permanent. So in effect, to eliminate this obligation for those impacted for the remainder of 2020 and maybe even going forward. So that's certainly something to keep an eye on for a Social Security and Medicare system that may or may not be in need of funds. This was a big one as well. The eviction moratorium had expired on the 24th. While the moratorium hasn't necessarily been extended, there is language somewhat loosely that says they're going to protect homeowners from foreclosure and tenants from eviction due to hardships caused by COVID-19. So they are looking to make sure that people don't lose their place to live due to this unfortunate pandemic. And lastly, student loan payment relief. So the moratorium on student loan payments extended through to the end of the year. So no payments would need to be made and there wouldn't be any penalty. So just helping people delay those payments for those that are on the hook. So as we said above, the sides couldn't come to an agreement, and frankly, they still remain far apart as of this morning. We saw back in May, the House had issued a $3 trillion package known as the HEROES Act. And just about 2 weeks ago, the Senate came out with their answer, a smaller package in the $1 trillion range. So what we've done here is try to list some of the hot button issues. They're all a bunch of issues, and depending upon what you see, read, or hear, which issue is of the utmost importance. But to me, or to us, these are at least these 4 issues right now are some pretty big ones. This is the unemployment assistance, which we just said President Trump had extended to $400 a week. The old $600 a week had extended. The House of Representatives through the HEROES Act wants to extend that to $600 a week through the end of January of next year, whereby the HEALS Act reduces that $200 a week from August 1st to September 30th, and then 70% of lost wages. So a way to calculate that to incentivize people to go back to work. Another big one we've seen here is liability protection, whereby the Senate plan essentially would limit liability faced by schools, businesses, and other organizations to attempt to basically preempt certain lawsuits and really increase the standard by which people could be found guilty of potential issues and have to pay compensatory damages or other damages, whereas the House of Representatives bill actually wants to enhance work protection by a certain increased level of standards. So we can see a real divergence here. State and local government assistance, the HEROES Act wants to provide nearly $1 trillion in state, local, territorial, and tribal governmental aid, whereby the Senate Act doesn't necessarily include any new funding, but expands the use of the CARES Act fund. So it allows them to access funds that were put forth via the CARES Act. As we were saying, the tenant and homeowner assistance, they are both parties, I think, are looking to provide some assistance to renters and homeowners, but there is nothing specific in the Senate bill about extending the eviction moratorium. But the House bill does look to provide assistance in homeowner aid, as well as protection from evictions and foreclosures. So some other issues here, we saw an economic stimulus that's in both packages. The amounts are a little bit differently, but there is a second round of economic stimulus. We see an enhancement of the employee retention credit, be it $15,000 per quarter for the House and $10,000. I should not say 10 a quarter, it should say 10K a quarter, for a maximum of $30,000 at the Senate level. So both parties, whereas now it's essentially limited to $5,000, are really looking to both enhance this credit. There are certain refundable tax credits that will allow taxpayers to get money back related to certain fixed costs in the House bill and certain expenditures related to PPE and other protection expenses in the Senate bill. And as we said, this would be a refundable credit, so it would allow taxpayers, irrespective of whether or not the bill gets passed, to put some money back in their pockets. We saw the work opportunity credit. While it was not addressed in the House bill, the Senate bill actually has a new targeted group related to COVID-19 unemployment recipients and allows a 50% credit on the first $10,000 of qualified wages. So that's a little bit of a benefit there as well. Another one that's been big, although hasn't necessarily seen as much press lately, but the PPP 2.0, another round of PPP funding. The House bill was passed in May, where there was already a second round of PPP funding, where the Senate bill passed by the Senate a little bit later. Senate bill looks to have a second, essentially a second PPP for borrowers with 300 or fewer employees who actually show a decrease in revenue. So that could be available as well. There's a mobile workforce bill that the Senate has put forth that would assist workers who are unable to work essentially in their resident state or because of COVID-19. So it may shield earnings from having to file on that non-resident state. And then we've seen testing and tracing, a measure in areas that are important to both parties, but testing or funds allocated to both. It just really depends on which bill, how much will be allocated. But there's been other issues as well: education, aid for essential workers. We saw the Senate bill indicate an expensing of business meals for tax purposes in an effort to stimulate the restaurant, the food and beverage portion of our economy, and that would allow taxpayers to get a full deduction. Now those meals are potentially limited at 50%. And now the state and local tax cap, it was in the HEROES Act, that would allow borrowers again, or allow taxpayers again to deduct state and local taxes. The Tax Cuts and Jobs Act put a limit on that to $10,000 per year. So this would eliminate that, the HEROES Act, for 20 and 21. And while not necessarily in either of these bills, we just wanted to point out too that tax deductions for PPP expenditures is something that's taken a life of its own, if you will, on both sides of the aisle. We've seen some motivation to make these expenditures deductible. We've also seen a number of the societies, the AICPA, other societies, levy or poll Congress to and the lawmakers to ask them to make that deductible as well. So not sure that this will make it into any of our next bills, but this is something to keep in mind as well, just a general Capitol Hill update. But for those borrowers that received PPP funding, note that there are plenty of people carrying the torch to make those deductions, expenses deductible as well. So something to keep in mind as well. A lot has been going on Capitol Hill, and we'll continue to focus on that. So the next, this is actually for those people residing in New Jersey, but this portal actually opened this morning about an hour and 15 minutes ago, but a small business lease emergency assistance grant program, which essentially allows businesses to apply for grants of up to $10,000 for lease costs. And the businesses must be located in one of 64 eligible municipalities. You see there's a website that's listed here. If you can write it down, hopefully you can go, but if not, just essentially click on the emergency assistance grant program or Google it and you'll get to the website. But you have to be located in one of these municipalities in order to be eligible for this benefit. And lease costs include tenants leasing commercial space, leasing space in commercial buildings, mixed-use buildings, and tenants leasing space to operate storefront businesses, but it does have to be with 5,000 square feet of lease space or less. So they're targeting some of the smaller borrowers. So with that, I will turn it over to Todd for poll number 2. Todd, take it away.
Thanks, Steve. Okay, poll number 2. What year was Saks LLP originally founded? Was it 2001, 1982, 1969, or none of the above? So we'll open up the polls. Was it 2001, 1982, 1969, and none of above? Well, or none of the above. So we'll take that poll, let folks weigh in, give you a little bit of time. 2001, 1982, 1969, or none of above. Okay, we're going to count down 5, 4, 3, 2, 1. Okay, most of you, looks to me like most of you said 1982, and that is not the correct answer. It actually is none of the above. Saks Macy Fromm, which is now called Saks LLP, was formed in 1956. So I guess very soon we'll be celebrating our 65th anniversary. So it's 1956 is the right answer.
Okay,
So let me turn over the next part of the session to my partner Josh to talk about the PPP loan forgiveness, the new SBA FAQs. Josh, take it away.
Thanks, Todd. Good morning, everybody. So we got some answers, not all, but some. So just to kind of share with everybody what did come out on August 4th, the SBA did release 23 new FAQs focused primarily on PPP loan forgiveness. Originally, they were talking about 25 to 30. And as Todd will discuss later, there's still, even with these 23 FAQs, there's still questions that do exist. So we're going to go through some of the key changes, some of the things that did get clarified, but the FAQs were broken out into 4 categories. One being general loan forgiveness, loan forgiveness payroll costs. There was 8 FAQs there. Loan forgiveness on non-payroll costs. There was about 7 FAQs there. And loan forgiveness reductions. There was another 5. So as I said, this offers guidance and clarity for certain items, but still leaves us wanting a little bit more. I think we're closer, but we're still not there. So we do believe that there is additional SBA guidance that is coming out. So like I said, there was some new SBA FAQs. Here's what we know now. So on the employee retirement benefits, how does the paid and or incurred standard impact employee retirement benefits? So this was if you're following along in your FAQ handouts, payroll cost FAQ number 7. So in that, it did say that the employer contributions for employee retirement benefits that are paid or incurred during the covered period or the alternate covered period qualify for forgiveness. So if we're paying 2019 or if we're up to date for 2020. However, forgiveness is not provided for accelerated retirement benefits from periods outside the covered period or the alternate covered period. So we cannot take the full 2020 into our calculation here. Okay, the next one, loan forgiveness payroll cost, FAQ number 8. The inclusion of retirement benefits as payroll costs for owners as compared to employees is dependent upon the given choice of the entity. So for a C corporation, you're allowed to include 2.5. Basically, if you were to do a calculation of 2.5 divided by 12 of the 2019 employment retirement contribution, if you're an SCorp, the same calculation applies. If you're a self-employed Schedule C, or if you're a farmer, Schedule F, the retirement payments are ineligible. And if you're a general partner in a partnership, again, retirement payments are ineligible. Okay. There was some questions about whether or not you could include health insurance for an SCorp shareholder. The issue is we had defined where our employer health insurance contributions for SCorp shareholders valid payroll costs. This is specifically the employer health insurance contributions for shareholders owning less than 2% of the corporate stock are eligible payroll costs. So again, SCorp shareholder holding less than 2%, you can include. There is a caveat that you need to be careful of. Health insurance contributions for shareholders owning at least 2% of the stock are ineligible for payroll costs. And again, you need to see here as well, IRC section 318, which is the family member attribution rules. They must be considered here. We finally got an answer on our interest on unsecured debt obligations. The question everybody had was, is interest on unsecured credit eligible for loan forgiveness? And the response here in the loan forgiveness non-payroll cost FAQ number 4, as the debt is unsecured, the interest is not forgiveness eligible. So you cannot include that interest expense in your calculation. Okay, under renewed leases and refinance mortgages, are rent payments on renewed leases and interest payments on refinance mortgages eligible for forgiveness? The response here under loan forgiveness non-payroll cost FAQ number 5. So if you have lease payments for renewed leases that were in existence prior to February 15th, 2020, they are eligible for forgiveness. And the same thing with respect to mortgage interest. If those original mortgages were in place for your real or personal property prior to February 15th, 2020, they are also eligible for forgiveness. Okay, the $1 million question was, what can we or can we not include as part of transportation utilities? Well, we finally got an answer. So the answer is found under loan forgiveness, non-payroll cost FAQ number 6. And it says that loan transportation costs pertain to transportation utility fees that are assessed by state and local governments. So does not include fuel. However, fuel for vehicles and things of that nature. However, if you're a Schedule C filer, you should note that the interim final rule, the location is below, which was effective April 20th, 2020, indicates that gas used for driving business vehicles also qualifies as a PPP eligible use of proceeds. Again, there is broad-ranging applicability in terms of gas expenditure qualification for non-Schedule C filers, has still not been clarified. There was an AICPA webcast, they do one every week. This is still an area I think that is either pending further interpretation or people are just not interpreting it correctly. But again, based on what the FAQ says, for a business that is not Schedule C, it's pretty self-explanatory now with respect to transportation utility fees. Okay, seasonal employers, right? We were asking the question whether or not there would be a different application for these filers. The response, which was included in the loan forgiveness reduction FAQ number 2, is that there will not be another a separate application for these filers. Seasonal employers that elect to use a 12-week period between May 1st and September 15, 2019 to calculate its PPP loan must use the same 12-week period as the reference period for any potential reductions due to headcount and or salary wage decreases. And the next one, the 25% salary wage reduction. Again, this is an important one. So the issue was, are all forms of compensation included in the 25% salary wage reduction test? This was clarified under loan forgiveness reduction FAQ number 5. And this says only decreases in salaries and wages are considered for purposes of this test. You are to exclude bonuses and commissions. Again, it's a salary wage comparison for the 2 periods. So when you do this test, you want to make sure that you strip it down to the base wage. And at this point, I'm going to turn it back over to Todd, who's going to take us through poll number 3.
Okay, counting today just ranked Sachs what number top firm in the nation? 98, 120, 75, or none of the above? Was it 98? Was it 120, 75, or none of the above? So, folks, cast your votes as to what number you think that is. 98, 120, 75, or none of the above. And we will give you a moment. Countdown: 5, 4, 3, 2, 1. All right, it looks to me like, wow, some of you said none of the above, some of you said 75. The right answer would be 98. We were ranked 98. So if you said that, you were among those who got it right. All right, so I'm gonna kind of go through the rest of this. So like Josh said, there were some new SBA FAQs that answered questions, and there were some FAQs that we already knew the answer to, but thank you very much for putting in writing, because it was pretty clear from what was published before, at least we think so. But we're gonna go over some of the things that we had already known, just to kind of reconfirm the way this thing is going. And by the way, the point that was made earlier is that we still don't have the answers to everything. We're going to cover also some of the things we still just don't know. So in addition to new guidance on the prior slides, certain items were recapped or reiterated. 25% salary wage reduction. This is a loan forgiveness reduction FAQ number 4. Reduction in hours does not equate to a salary reduction so long as the hourly wage / annual salary is not changed. So keep in mind, headcount and or salary wage reductions, which we're going to go over again, could reduce forgiveness if the exceptions do not apply. And again, folks, the reason we keep on covering this section on the exceptions is because there's still a lot of confusion on it. Next, loan payment timing. General loan forgiveness FAQ number 3. Provided the borrower submit loan forgiveness applications within 10 months of the close of the covered period, the loan payments are not required until the lender submits the forgiveness amount to the SBA. That was a question as to, so when do I start to have to pay this stuff? Well, we've been confirmed once again, it's within 10 months of the close of the covered period, and interest does accrue to the extent of non-forgiveness during the time between the disbursement of the loan and the SBA remittance of the forgiven amount. Okay, it was tough to say on a Monday. Okay, next, what we already knew, but we're confirming it again. Payroll costs paid and incurred standard, which was the loan forgiveness payroll cost FAQ number 1 and number 2. So payroll costs incurred during the covered period or the alternative covered period but paid after the close are eligible for forgiveness. Must be paid on or before the next regular payroll date after the covered period or the alternative covered period. Payroll costs incurred before the covered period but paid during the covered period are eligible for loan forgiveness. Not the case if the alternate covered period is selected. So that's something to keep in mind that we already knew. Also, concerning non-payroll costs paid and the incurred standard. Loan forgiveness non-payroll costs FAQ number 1 and number 2. First, non-payroll costs incurred during the covered period but paid after the covered period are eligible for forgiveness and must be paid by the next regular billing date. Non-payroll costs incurred before the covered period but paid during the covered period are eligible for loan forgiveness. So folks, again, these are things that you could have known this from what was written, but now they're putting it out in writing. Loan forgiveness application. General loan forgiveness FAQ number 1. Automatic qualification to use the form 3508EZ for sole proprietors, independent contractors, and self-employed individuals who had no employees at the time of the PPP loan application and did not include any employee salaries in the computation of average monthly payroll. So that was an automatic qualification. Hooray. Forgiveness eligible owner compensation, loan forgiveness, payroll costs, FAQ number 8. Well, let's go through this. 2.5 over 12 of the 2019 compensation, or $15,385 for the 8-week covered period, or $20,833 for the 24-week covered period. And there's no limit on health insurance or retirement benefits. 2.5 over 12 of the 2019 compensation, or $15,385 for the 8-week covered period, or $20,833 for the 24-week covered period, and it's a limit on healthcare costs for 2% or greater shareholders. Okay, forgiveness eligible owner compensation for those of you who are owners. Let's talk about SCorps and rather Schedule C filers and Schedule F filers. For those folks, 2.5 over 12 of the 2019 net profit as reported on Schedule C or on Schedule F, or $15,385 for your 8-week covered period, if that's what you selected, or $20,833 for your 24-week covered period. If you're a new business, you can use an estimated Schedule C or Schedule F. Health insurance, retirement benefits, and state or local taxes are not eligible, or we put here ineligible for forgiveness, as these are paid out of your self-employed earnings. Notice we're talking about 2019, which kind of implies that you filed your return. General partner, 2.5 over 12 of their 2019 self-employment earnings multiplied by 0.9235, or $15,385 if you are the 8-week covered period, or $20,833 for a 24-week covered period. Health insurance, retirement benefits, and state or local taxes are ineligible for forgiveness, as these are paid out of self-employed earnings. All right, folks. So what do we still want to know, need to know, and don't know? We're told that we are going to get the answer to these questions, we think. So let's go through the questions again. Will the expenses be deductible for tax purposes? We will see. How will the state taxing jurisdictions treat the forgiven funds? We will see. How do borrowers document the FTE rehire exceptions? How will FTE rehire exceptions apply if borrowers apply for forgiveness before the end of the covered period? That's the golden question, by the way. You know, that's why folks are still saying, let's wait until we get all the FAQs, because again, if you do choose the 24-week period, yes, you can apply for forgiveness before that period's over, but how would the FTE rehire exceptions apply if you apply for that forgiveness before the end of the covered period? That's still not a known answer. And if you know the answer, let us know where you're getting the support for that. Will the cost eligible for forgiveness be expanded? We'll see. Will PPP loans beneath a certain threshold receive automatic forgiveness, and to what extent? We know what's being hinted at. Will there be a separate application for seasonal employers? I think we know the answer to that. I think the answer is going to be no. And when will new guidance be released by the SBA and or Treasury? We're happy to hear that they're not promising it for Thursday and Friday of every week like they did in the past, or at least that's what the AICPA told us they told them. How many more times will the forgiveness application change prior to being submitted? We will find that out hopefully sooner than later. All right, so not to bore you, but folks, again, this is one of the areas that people keep on asking us questions. So if you keep asking us questions, we believe that means it's still unclear. So we're going to make this as clear as possible. Once again, the FTE rehire exceptions, this is the summary. Restore employees terminated between February 15th, 2020 and April 26, 2020. Now it's by December 31st, 2020. You heard me right. So you need to maintain written documentation of employees fired for cause, employees who voluntarily resigned, employees who voluntarily requested and received a reduction in hours, employees whose hours were reduced and the employee refused an offer to restore hours at the same salary or wage. Remember, there were included in the information that was released a requirement that if you offered someone their job back and they decline, you're supposed to notify the DOL, the Department of Labor, of that so that they wouldn't continue to get the relief. Safe harbors. Let's talk about some examples. Safe harbor number one, good faith documentation of an inability to rehire personnel who were employees as of February 15th, 2020, as well as an inability to rehire similarly qualified employees by December 31st, 2020. That's safe harbor number one. Safe harbor number two, good faith documentation of an inability to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before the February 15th, 2020 due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020 by the Secretary of Health and Human Services, the Director of the Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration related to the maintenance of standards for sanitation, social distancing, or any other any other worker or consumer safety requirement related to the COVID-19 pandemic. So that's the rehire exceptions. Okay, folks, so we're going to go to poll number 4, and then after that, stick around because we have some concluding remarks for you as well. So we're putting this one in because obviously this is another frequently asked question of you all. How do you obtain a 1 CPE credit for this webinar? 1 CPE credit. You answer 3 out of the 4 poll questions. You complete and submit the eval form found in the handout sections. You stay attentive throughout the webinar because we are monitoring you, or all of the above. So is it answer 3 out of 4 poll questions? Is it complete and submit the eval form found in the handout section? Take a look at it. Look at it right now. You can see it. Stay attentive throughout the webinar, or all of the above. Going to give you a few more seconds to answer this last polling question. Okay, we're going 5, 4, 3, 2, 1. And what is the answer? Okay, well, for those of you who said answer 3 out of 4 poll questions, that was wrong. If you answered all of the above, that is correct. And it's good to see that every time we do this, that percentage increases over and over. One day, maybe it'll be 100%, so that you all know how you get the CPE credit. By the way, if you don't want the CPE credit, you don't have to follow these instructions. Okay, so we're going to go to our last slide, and basically what we want to do right here is kind of talk about some of the things we didn't talk about. So I'm going to invite back Josh and Steve to make some concluding remarks. But before I do that, just know that we do plan on having another update next Thursday on August 20th. And just know that if you go to our website, you'll find a whole resource center where you can register for webinars and for ongoing information. We do put out regularly e-blasts. Yes, you will receive a copy of this webinar if you registered for it. And if you have any questions that we did not address, or you just want some further information, there is the COVID-19 at sacsllp.com. So Josh, Steve, whoever wants to start this off, I'm opening it up to you all.
Okay, sorry about that. Thanks, Todd. Right, so before I turn it over to Josh, I just, as a tax professional, something that's been near and dear to me, as on top of the whole managing loan forgiveness and loan options and forgiveness strategies, has just been the federal and state treatment. As I had mentioned before, there is a lot of support on both sides of the political aisle, if you will, for PPP expenses to be deductible for federal tax purposes. So that essentially, while you would be able to already are able to exclude the funds from income, as of now you're not able to deduct it. Now they are saying you'd be able, there is potential to get a deduction, and a lot of societies and lawmakers are fighting for this, so it would essentially give taxpayers a double benefit. So that's on the federal side, but on the state side, taxpayers need to pay attention as well. The states, each one's going to treat it differently and may or may not come out with specific guidance related to PPP funding. Just this past week or two, we saw Kentucky, Maine, and Massachusetts come out with information specific to PPP funds. Some are letting the following federal, some will say we're not going to follow federal, but we'll allow you to deduct, you'll include an income, but we'll allow you deduction. So that could be neutral right now, but something that needs to be minded for and looked after as we get a little bit further along. So hopefully we'll get some additional guidance out on the federal side, which could impact the state side, but that's something taxpayers want to consider and something we'll be monitoring as well. So I'm going to turn it over to Josh now, and he'll wrap this up, and we'll take it from there. Josh?
Thanks, Steve. So just a couple other things. We're still getting questions from people who are eager to submit the application for forgiveness. Again, at this point, the information that's coming out from a lot of the banks is that, they hopefully should be able to start taking applications by the end of the month, by the end of August. I guess we'll have to sit back and wait and see what happens there. I don't believe that they will start accepting applications unless they're really the easy form, until all of the FAQs and all of the information is readily available, because from their standpoint, they want to make the best, certainly make the best determination given the information that they have. So there is that. We've had a couple folks to this point try and apply for the Main Street program. There does seem to be a lot of pushback from the banks about this program, saying that it's not favorable to the business, but there may be some other traditional lending opportunities out there. So if you are in need of funds, I think you need to weigh the benefits of all the loans and certainly, you know, start having those conversations. Banks are saying that they are lending. We're still waiting for deals to close at this point, but again, if you're in need of funds, I think it's important to explore all the opportunities. There are also additional SBA loans under 7A. There's an expansion loan along with other things, and the SBA is very active outside of your PPP loans, your EIDL loans, which people can still apply for. You know, to this point as well, it provides you the opportunity for the $150,000, you know, to help cover your operating expenses. So still seeing a lot of loans, but you know, there are these other 7A loans as well available up to $5 million, you know, that are out there. So again, I think it's important that you do continue, if you do need it, to explore all options. If you want to talk anything through, you know, please feel free to reach out through the COVID-19, you know, or you can reach out to Steve, Todd, or myself directly. You know, we can certainly update you as to what we're seeing there. And just as Steve said before, staying on the cutting edge and being in front of everybody. Had a conversation Friday with a group that is actually selling PPP insurance for loans over $2 million. So if you think there's an issue, you know, or you have concerns that upon audit maybe you have made a bad good faith certification, or maybe, you know, you missed you were given a loan and you didn't meet the affiliation rules. You know, this was the first one that's popped up. I'm sure there will be a lot more, but again, just be familiar with, you know, everything that's out there to help you continue to make sound business decisions. And with that being said, I think we're done for today. Stay tuned for more e-blasts, invitations for upcoming webinars, and be safe, everybody. We'll see you soon. Take care. Bye now.